Hey everybody. Hope you're having a good night. Welcome to another episode at the Creative Collective where we think outside the box. Brought to you tonight by myself, Lance Riggin, Juan Padilla. Damon couldn't make it tonight. He has to put out a fire in his business. Hope everything goes good for him. We have a very special guest, our very own Justin Abee tonight, guys. Justin is a an expert in multifamily, and Justin's been like a killer underwriter. I know he's got some cool programs. He's in a mentorship for multifamily. He's been learning about it for quite a while now, and he knows he's the guy to talk to if you want to learn how to raise capital for multifamily deals. Justin, welcome, bro.
You guys, thank you.
Man, Justin is the guy that Donald Trump turns to whenever he has multifamily questions.
That's yeah, I get calls from him at, all hours of the night.
I knew it. Knew it. Sweet, Justin. You want to start off by just telling us about you? Where'd you grow up? Where are you from? And what did you do prior to real estate, man?
Yeah. So I grew up in the Bay Area of California around Marin County, so close to San Francisco. Grew up in my dad is a builder. My grandfather's a builder. So I grew up visiting job sites when I was a kid. My dad was on the forefront of kit homes before they became big, modular homes where they would build the walls and everything in the factory and bring them all together and build them all, build a house in a day. And so I would be digging in the dirt when I was 5 to 10 years old, watching them build houses. And then moved to North Carolina when I was 10, where my dad was from. And so my dad continued the building that he was doing out there, doing ground up builds and fix and flips. And so I learned to swing a hammer and, drywall and do light electrical work when I was in high school. Went to school to college down in Savannah, Georgia, for design, for furniture design. But all through that, I was helping a friend of mine who had a fix and flip business down there. Savannah was going through a big boom, so I was doing a lot of finished carpentry and carpentry work for him and helping him flip houses. And then after that, went into my design career. All along the way, I was still doing single family real estate on the side. So I had a 20-year career in design, leading up to a director of product development, production and quality control for a large furniture manufacturer. I did a lot of project management, contract negotiations, a lot of stuff that really prepared me for eventually making the move into the multifamily space. About 2 years ago, I decided that I wanted to transition into full-time real estate investment and started my own business in multifamily. So joined a mentorship as one does, and learned the ins and outs of it all, and really immersed myself into it. And took 6 months to a year to learn the whole industry. A lot of things were transferable from what I did before. Good with numbers, good with contract negotiations, good with relationships. And really multifamily is a team sport. So so I feel like I have a very well-rounded skill set that is well utilized in these projects. Leading up to last year, we made a lot of moves to try to position ourselves to make this transition, and if it weren't for that, I would have been in a lot of trouble. But last winter, I got laid off from my full-time job. And it was a sort of a blessing in a lot of ways, because, I got severance. I got 3 months of runway to be able to continue working on my business, and really become the full-time investor. I think
Yeah.
I think it's an important goal for anybody out there that is working full-time and trying to do this, is try to figure out your exit strategy from that 9 to 5, because it could upend you at any point.
Mm. That's good, dude.
Yeah.
So, Justin, you said is that your wife, or are you talking about partners? When you
My
said
wife
we.
is one of my partners. Yeah. And
Okay,
then,
cool.
My wife and I started our business, Pinnacle Community Capital Investments. And we are now in the process of taking a couple of our partners that have been in some of our deals, and sort of coalescing a new business together, and that's going to be called Action Capital Partners.
Ooh, nice, man.
Yeah. So we're working on the branding and the setup and all the marketing currently. So looking to launch that this month. Currently working on a course to as a lead magnet for investors, how to invest in multifamily passively. And so the future's looking up, and really excited to share some of my knowledge today.
Nice. You're not wearing sunglasses. How bright is the future, my friend? Did you want to talk about your soft jazz band that you're in, Justin? I'm just kidding you, man.
We're gonna get to his Air Supply days. We're gonna get into that, man.
Yeah, Kenny G is one of my bandmates.
I'm just giving Justin a hard time, guys. Justin's in a cool rock band, bro. Like, it's awesome. Most people don't know that about you.
I'm a
how'd you
man
get
of
into
mystery,
music?
man.
Can we dip into that just for a minute? Like,
Yeah.
about your music? How'd you got into music, and what are you playing, man?
Yeah, I got into music in high school, as most people do, playing in a band, and then just going on from there. I play percussion. I'm a drummer. The band is a funk and soul band with a little bit of rock, and I play congas, timbales, all that kind of stuff, and an 8-piece funk band called the Humidors.
Nice. Love it, bro. I love music. I have to check you guys out sometime.
Yeah, I'll send you some stuff.
Yeah, dude, for sure, man. I'm getting more into a little different part of my life. I was pretty hardcore when I was younger. I don't know if you guys would ever believe that.
I could see you as a thrash metal fan.
Oh yeah, dude, big time metalhead, dude. Long hair when I was young, right? Yeah. Anyway, yeah, cool, dude. So let's get into this. What made you decide to get into multifamily versus like single family or commercial real estate or anything else like that? Why did you focus on multifamily? Why did you choose that?
It was, I had been doing some single family along the way, here and there, doing a flip here and there. I had been in the business with my family. I saw that, I learned a lot of the fundamentals of construction and business and real estate through that. But the scalability is really the main thing. It's really hard to scale a single family portfolio, and it's also it's really hard to do that where most people are trying to do that traditionally. I know we all come from the sub 2 world, and it makes it a little bit easier, but at the same time, the learning curve is so big in the sub 2 world, because there are so many ways of going about it. I loved the team sport aspect of multifamily. I love building relationships. I think that real estate in the single family world is cutthroat a lot of times. I think PACE is one of the only people that really encourages teamwork and building together, and I love that. But also, multifamily is ran like a business, and I've been in business for 20 plus years. And so I understand a lot of the fundamentals around business that really transpire over to or transpose over to multifamily.
Awesome. Great answer, man.
Yeah.
So let's get into it, man. Let's let loose, man. What's your main focus? Like, did you want to talk about raising some capital first, or what do you want to talk about
Yeah,
first? I'm going to let you kind
let's
of
talk
take
about
it.
that. So,
Okay.
I think, Lance mentioned my underwriting ability. I think as a capital raiser, you have to be able to underwrite because you need to be able to vet deals. And so, in the beginning, it's all about learning the fundamentals, the underwriting, the processes and procedures of multifamily, the verbiage, right? The terms that you need to learn. And a lot of that comes from, going on YouTube and learning the fundamentals there, or joining a mentorship. But I think that's really important. That's definitely step one. I identified that I wanted to be a capital raiser, one, because again, I love building relationships. I love helping people. Really the main purpose, I think, of a capital raiser is really to lift someone's life up. I mean, you're dealing with their retirement, their legacy, their children. And so I love getting to know people personally and helping them build wealth. And I also live out in the Bay Area, California, where there's a lot of money. So there's a great opportunity to be able to raise capital here. There's a lot of people in tech that don't know how to invest their money. And so a big part of my objective is to educate. And that's really how we decided to go into that. My wife has also worked in sales all of her life, and she's amazing at making people feel welcome and appreciated, and is a great salesperson. And so the two of us felt like that was just a natural fit in the multifamily space. It's also one of the best and easiest ways to get into multifamily projects. You don't have to, I mean, you need to know who you're working with. You need to do your due diligence, your background checks on the teams that you're working with. But you can rely on the experts on the deal, the operators that have been doing it for years and years, right? So what I set out to do was to align myself with top level operators, people who have been doing it for a long time. And in the world of multifamily, there's always multifamily syndication specifically. There's always an expert on the deals, right? It's the person that signs on the loan that has the net worth and the liquidity to be able to take down a deal and is the key sponsor, right? And so we lean on those guys as experts to help guide as we learn and grow. And I see, with anything I do, I'm always a lifelong student, so there's always something to learn. And we lend our knowledge and creativity in certain areas in the asset management calls and just the general project. But again, we're leaning on those people to be the experts in the projects.
That's good.
Yeah.
That's good. And it's like you said, PACE is constantly encouraging us to squat up, right? Partner up, JV with other people who are ahead of you, who know the things or who are better at certain things than you are. And that's what we do. We focus on our strengths, right? That's basically the best way to do business, man. I love it.
Exactly.
Cool, man. So what are you focused on now? What you want to talk about the deal that you landed a little bit, or?
Yeah. So, well, I'll just say, last year was a building year. We closed out last year with an acquisition where our team raised 1.8 million for a deal out in South Carolina. So that's really exciting. Looks like I got through all the contacts that I've built over the years, I got contacted by another person out in North Carolina, a market that I know very well, who has a good family friend who owns an $8 million property that has about 15 units on it currently, but is all entitled to build about 400 units. So looking at this development project, bringing $2.5 million to the table, the seller is going to stay in the deal and leverage. He's got a $50 million portfolio. He's going to leverage his contacts with banks to raise the capital for the construction. And I brought in a couple of investors with the 2.5 million. They become equity partners. And it's done in this project will be done in 2 phases. One is building of about 86 townhomes. So the 2.5 million will be sent to title. We'll line up the construction loan, all to be executed at the same time. And then we'll go into the building phase of the 84 units. We'll either refinance those at the end or sell them off as we go, which will raise capital to then build another 300 units of multifamily that we plan on holding ad infinitum, right? So, and in the long run, once the project's done, we're looking at about 20 million in equity, I would say, at the end of the day. So big project.
Baby.
Yeah, big project.
Awesome, man.
Looking like it may go through. So, everyone fingers crossed for us. That would be awesome. And then, we're looking, my team is looking to sort of have a hybrid model of acquisitions. One being raising money for syndications or funds for top operators and taking acquisition fees and cash flow and then buying smaller multifamily deals, seller finance. And so that's a big objective this year, is to go after those kind of deals. So, yeah.
Yeah, that sounds amazing. I've been hearing that seller finance on the small multifamilies is really going to be good this year. So we plan on shifting to that probably halfway through the year, somewhere in there. I'm not sure yet, but we plan on it too. I love it. And we got to squad up on some stuff, man. We started. So for those of you who don't know, Juan, Damon, Justin, and I started this entire podcast in our Facebook page out of the Elephant Challenge in December of 2022. That's where we all met, and we kind of did that Elephant Challenge. And then it was about multifamily. So we kind of we were the last 4 showing up to the meetings. And so we decided we would lock up and we submitted LOIs and offers. Nothing really happened last year, but we built a really cool relationship, and I love these guys, and they're rock stars. Justin is the only one I actually got to meet in person so far. In April, I think we met, right, at Vina's or at that multifamily event. But yeah, and Justin's a lot taller than he looks in real life. The dude's a freaking, like, how tall are you, Justin?
6'3", yeah.
6'3". I was like, what's up, bro? Like, anyways, yeah, cool, man. So let's get into the, capital raising stuff, man. What do you like? Where do you even start when you're raising funds for a deal like that in the millions of dollars?
Yeah. So, I joined a capital raising alliance recently. And they just it's described as 3 pillars, right, of getting your capital raising off the ground. Pillar 1 is get known. So you want to be targeted with who you're going after. So you want to know people's demographics. For me, I'm in the Bay Area. I'm around a lot of tech workers. I'm a father. I'm what I call a sandwich generation, where I have kids that are growing, and I have parents that are aging, and the sandwich generation has more money than time, and they want to have a better work-life balance so that they can spend more time with their children, and they can spend more time with their aging parents. That's the avatar that I'm going after. So you really want to identify who you're going after. That's step one. You want to make sure that they are in a psychographic that is conducive to putting in their money and into multifamily. So you want to make sure that they have good risk tolerance. They are able to commit their money to a certain amount of time. They have goals and interests and values that align with the overall goal. And then you want to make sure, you want to see if they have investing experience. So what's their investor graphic? So are they looking for short-term investments, long-term investments? What sort of level of control they're looking for? What sort of investable assets that they have? That's sort of the building block. As you start to you really need to start to put yourself out there and make yourself known as that person that people can come to help them build their wealth, right? And so a lot of that is, social media, starting podcasts like what we've done here, starting groups like what we've done here, and really putting yourself out there. You'd be surprised. A lot of people, everyone has a phone, right? And you have 1,000 contacts in there. I mean, what do you think your phone is worth, right? A lot of people look at it as like $1,000, right? My phone's worth $1,000, but the data that's in there is worth $5 to $10 million, right?
Ooh,
if you're
heavy.
just going out to start and letting your friends and family know what you're doing, and letting them know that you've educated yourself on this, and letting them know the opportunities that are coming, and really saying, I believe wholeheartedly that this is the way to go, that 90% of millionaires are created through real estate, right? Those people, if they are true friends and family, they're going to support you in what you're doing. They might not invest in your first deal. Some of them will. Some of my friends and family did. Some of them didn't. But when they start seeing what you're doing and what you're generating, they're going to come, right? And so there's a value of wealth in your phone, and it's just about how you use those connections, right? So that's really where most people start. Is the one-on-one. But then you want to go into the one-to-many, and that's what I was sort of getting into with avatars, right? And so you get to a point where you've exhausted all your personal contacts, and that's when you start building your network of people. And these fundamentals can really be used not only for syndication, but for private real estate investment, JV deals. They could be used for multifamily, mobile home parks, businesses, whatever you're strong at and whatever you want to be in, right, is really what you should be focused on, and letting people know what you're doing, right? So the one-on-one is the place to start, but then you come to a point where you need to really grow your contacts. And so that's where the avatars come into place. You want to be very targeted. You want to see what their goals are. Are they looking for passive income? Are they wanting to grow their wealth? Are they looking for wealth preservation, tax shelters, diversification? Identifying that and speaking to those needs so that you can craft your message around what they're looking to do. You want to see where they hang out. So Facebook groups, LinkedIn, mastermind groups, investor groups like what we have here, or even offline, IRA custodians, investment clubs. Get out there and beat the pavement and go to your local meetups. They're everywhere, right? And so investors can be at any at any turn in your life. Just talk about real estate, right? That's what really brings those investors into your world. And you want to start to become an authority in a lot of ways, right? You want people to understand what you want people to know that you understand what you're talking about, right? And so some of the ways to do that would be to create and lead a group like what we're doing here, collaborate with other leaders, or engage in existing groups and just add value. You also want to be an educator. I know, Lance and I have been talking about this recently. And Lance, you love to get Gators their very first deal, right? But you had a mindset that I'm not a teacher. And what really is true is that Lance is immensely a teacher, right? He's out there. When you're at a certain level, there's always going to be someone just beneath you on the rung below you, and someone just above you on the rung above you. You're the teacher to the people down on the lower rungs, right?
Yep.
You're coaching them through. You're letting them know how things should run. You've done deals. You're getting them into their first deals. So if you become the teacher, then people see you as an authority, and they're going to want to follow your lead, right? I think a lot of the things that I'm working on right now is and Lance is really good at this, becoming a celebrity, right? You're sort of you're putting your personal brand out there. It's something that I really need to work on. And understanding my flaws. I know that I need to work on this. It needs to be something that I'm focusing on this year. But writing books and pamphlets and lead magnets and that sort of thing, so that people see you and you become omnipresent out there in the world, right? So I think it's really, I think a lot of people struggle with just putting themselves out there on social media. Social media is the new business card.
Oh yeah.
We hear this day in and day out from Pace. He doesn't even take a business card anymore. He wants your social proof, and that is your social media accounts, your LinkedIn, your websites. So you really need to polish yourself to look professional. The second pillar would be then to start looking at building your leads. And that looks like, building your top 100 investors, going on and mining social media data. You can do that through Facebook and LinkedIn. There's some really creative ways. And then hosting lead gen events, right? And so currently I'm working on, like I said, the course on how to passively invest into multifamily. That's one of those lead gens that will bring people in to my ecosystem, and then I can start marketing to them. We're also working on deploying a weekly webinar that we can invite people to, so that they get used to coming to these webinars and understanding what we're doing. And then beyond that, it's all about getting the capital, getting people to commit, and that's done through finding those deals, finding the people to partner with, Mark says, be genuine and unique. Absolutely. You want to be yourself as much as possible. You want to build the rapport and the relationship and understand what people are struggling with, where they are in their life, so on and so forth. And really speak to their wants and desires, fears and needs, right? But once you have identified, a deal that you maybe want to raise on, whether it's a JV deal, you found this great piece of multifamily, or it's a syndication that you want to raise for, you have to then go into the marketing mode. And so a big part of our business is putting that marketing into place. We're working on Go High Level, as we talked about last year, or last week rather, working on the marketing side of things, really driving people and having those touch points that you really need to drive them through your deals and your ecosystem, and letting them know what your ethos are in investing, and really getting them to buy into not only the deal, but you and your relationship with them.
Bro, wow. Am I on here? Okay. My
Yeah.
dog ran in here a little while ago. I was trying to mute it, but I think I wasn't muted when I anyway, dude, that was great, man. So much to unpack there. And if Damon was here, he'd unpack it a lot better than I would. Juan,
Yeah.
you want, but I wanted to just say something really quick. I appreciate how articulate you are, man, and how well versed in multifamily and raising capital. That is something that you definitely dumb down when you talk to me, because I appreciate that though, man. Like, I'm a simple man. Like, I don't know if anyone was on family night the other night, but Pace was talking a ton of shit about multi-family investors, right? Did anyone catch that? He was talking about IRR and all this stuff. He's like, you guys are the stupidest people on the planet. He went on this rant for 30 freaking minutes, dude. It was
Yeah, no one
funny.
understands IRR. They want to know what their annual return.
Exactly, dude.
Yeah,
Right.
no,
And he said
totally.
it's the stupidest thing. Why they just overcomplicate every single thing when they don't need to.
Yeah,
All these stressful terms and stuff.
Absolutely. I agree with that. I leave IRR generally out of our presentations. I'm giving
Nice.
them the annual rate of return because that's what people understand, and you got to relate to them. Lance, it's not dumbing down. You're a smart guy, man. I'll give that to you. But if you go out and you throw big terms out there and you talk about things that people don't understand, their face glazes over, right? You need to be able to compel them to listen, right? And a lot of that is just relating to them and talking to them in average terms, right? Multifamily it can be complicated, but it doesn't have to be. You can explain it in a very uncomplicated way. But I think everybody wants to feel, like it's a superior asset class to investing in single family. And really what we're doing is a slow flip on a large building, right? Simple terms. A lot of the same principles go into that. And so you got to be able to relate to people where they are, and not everyone is going to know all the terms and things that go along with multifamily.
Well, I think that's the biggest thing when it comes to like someone like you, Justin, that can take something so complicated and so daunting and breaking it down, right? Breaking it down to you know, a way that we can all understand it and not have to be forcing ourselves to try to understand it, right? It's a lot easier for you to just convey, break it down, make it easier for everybody to digest, and then you can keep things moving along versus losing. Like if you're here presenting to us, right? And you're breaking it down in such a way that we're not having to try to understand it, and then you're losing half of the crowd while half of the crowd is still with you at the end. I think it says a lot about, an individual like yourself that can take that has the heart of a teacher that can break that stuff down for us. And
Yeah, awesome.
yeah, I mean, I obviously appreciate your friendship and of course our partnership here. And I know for a fact that everyone's getting blessed tonight by hearing what you have to say about what your experiences are with multifamily, brother.
Yeah, thank you. I think Lance always asks, what are you reading and what books do you recommend? And the one that of course, the name just escaped me. Pitch Anything by Oren Klaff. That's an awesome book, and what he really expresses to you is you have 20 minutes of people's attention, and that is of varying degrees of attention, right? You need to be on it. You need to, and it's all about frame control and collisions of frames, and one person has one frame, another person has another frame. You need to command those frames throughout that 20-minute presentation. Beyond 20 minutes, it's wasted on people, right? And so, really compelling them to be able to listen and not get lost in the weeds. That you can come back to those details of what a deal looks like, but you're really trying to, and this is what I'm really trying to implement into my business, my capital raising, is you're trying to connect with that investor or that seller or that buyer and see if it's a good fit for them and for you at that moment. Can you work together, right? I don't want to work with someone who is going to be, a stick in the mud and always be checking in on the project and just a pain in the ass. And you're trying to identify that within the first 20 minutes, right? But then you're also trying to compel them to invest in your project, and so it's all done with story and intrigue, and a lot of people think that we're all motivated by money, but we're not. We're motivated by opportunity. We're motivated by knowledge. We're motivated by intrigue. We're motivated by things in our life. Money's only the vehicle, right, that helps us do all those things. And so going in and saying, oh, we have great IRR and this and that, and just expecting people to invest in your deal is, there's no intrigue there, right? And so you really want to build that intrigue and leave them wanting more after your initial interviews. And I think that's why we try to keep things, the presentations here a little bit short, and then we build a story around it, right? We take the story in the beginning of the person's life and their trials and tribulations and where they came from, and then we give them about 20 minutes, and then we let people ask questions for the last 20 minutes, right? It's that attention span. And so that's that book has been amazing. I recommend it to anybody who's out there pounding the pavement trying to drum up your own deals, drum up investors. It's something that's really struck a chord with me recently.
Awesome, man. What was the name of that book again?
Pitch Anything.
Pitch Anything. Awesome. Oh, thanks. I was gonna Juan beat me. Man, that was great. I love what you're saying, man. Like you and pace is a prime example of what what you just said. There's no need to overcomplicate it, right? You're dealing with a lot of these sellers, especially in the small multifamily. It's a small business, small family business, and they don't know what the hell you're talking about. So meeting them where they're at, basically, is really, really important. And people overthink getting on the phone all the time, bro. Like I talk to people every single day, and I've told some of these people over and over and over again, I'm like, just get me on the phone. Like, just get us on the phone, right?
Yeah.
All you need to do is have a conversation.
Yeah.
You're just building rapport. You're finding out what the pain point is. You're building rapport, getting them comfortable with you, building some trust. You don't have to know all the terminology and everything about real estate. that's
Yeah.
such a big mark that people miss all the time.
Well,
It's like,
we're
just
we're
be their
we're in
friend,
an we're in an age where everyone wants to text. No one wants to get on the phone anymore,
right?
you know, and you're not going to build those relationships. It's all relationship building is
Yep.
what we're doing here in
Mhm.
in multifamily, single family, business, everything, right? It's building that rapport. And if you can't get on the phone and have just a normal conversation with someone, you're never going to get to that point where you're going to convince someone to sell or convince someone to invest, right?
Yep.
Ideally, what you would do is you'd have so much out there that people feel like they know you before you even get on the phone, right?
Yeah.
I think with a lot of what you know you've done and we've done here is that people know us from the fact that we've done this podcast. And I'm sure
Mhm.
people get on the phone with you with your Gator deals and they say, I feel like I already know you because I've been on all your Zooms, I see your videos, I see this and that, I know your life, right?
Yep.
And so rapport is already built to start with. That's the ideal situation. But we, you know, people really need to drop their guard and get on the phones and build those communication skills that are needed to get things done in this industry. Come
That's
on to
so
our
good.
come on to our podcast, ask questions,
Yeah.
show your face. You know, all these things go a long way to really get to a point where you're a trusted leader or you're a trusted business partner or you're someone that someone wants to work with, right?
Yeah, exactly. And it's great to get in the Zooms and get on all the trainings and everything, but you can't live there. You
Right.
have to get out into the real world at some point and make the calls.
Yeah.
That's great, bro. Awesome. Do you want to open it up for Q&A, man?
Yeah,
Anyone
absolutely.
have any questions, guys? You can raise your hand or just unmute yourself and hop on up here.
Yeah,
We could go.
I think we had someone had a question on the chat. Let's see. Mark, it looked like Mark Presswood had a couple of questions. Mark, do you want to come up here and ask your questions, brother?
Oh, I could have 100. We could talk all for another 4 hours if you want.
Mark's great. I
Fire
just
away,
got to hang
man.
out with Mark recently. Let's see.
Yeah, no, me and Lance got on a call finally. I've been, you know, he fell into the algorithm. I mean, the universe is amazing. Pansy got tossed into my algorithm. So
Yeah.
uh, this year I'm kind of on fire. I've been on fire for like 4 years. This is not going to happen overnight. Like, but getting in rooms like this is where you're going to get a lot of value, and the rooms get smaller and smaller and more quality. So, pitch, tone, and silence. Let people process it. That's huge. You know, I mean, it's not a headlock thing. We're not convincing. We're always just nurturing and casual conversation. You know, you use their pitch, tone, and silence. It's like dating. Imagine dating. You know, you're not gonna just walk right up to somebody in the grocery market and say, "Hey, you want to get married?"
That's right. That's right.
That's good.
You know, that's
You might
totally
have to
what
go get a
that's totally
bottle of
what a lot
wine
of
or
people
something. You know.
and that's totally what
So
a lot of people do. They
Yeah.
go up to people that they've never talked to and they say, invest in my deal.
Yeah.
It's like, you know,
Yeah.
take me out for a steak dinner first, right?
That's right.
that's what Lance told me when me and Lance were chopping it up. He says, you know, people come to him right away. They say, "Hey,
Yeah.
I got this deal. We're ready to go." And he's like, "Okay, well, what are the comps? What about this? What are you thinking?" Like,
How about we start with your name? What's your
yeah,
name? Hi, I'm Lance. Nice to meet you. Like, that's where I like to start personally, but yeah.
yeah. I appreciate you, Lance. I appreciate you guys doing this thing and the invite to the group and everything. You guys are, you know, we're just gonna grow this thing to the biggest thing we could ever build it to. You know, this is our
Yeah,
legacy right
absolutely.
here.
I
My
appreciate
my
you, Mark.
my
Hey.
Facebook, you know, in reality, it's not even for me. It's for my kids to enjoy when I'm gone.
Yeah. Yeah.
Oh, that's cool, man. I
My
love
my
that.
dad's gone, and you know, he passed away at a very young age. He didn't get his 32,000 days, and I wish I could have a video or something like this because it would be priceless.
It's
But
good.
That's
that's what it's all
powerful.
about, man. Yes.
It's powerful, man. Thanks, Mark. Hey, that reminds me, tell your friends, guys, share with us.
Yeah,
Share the
please.
Facebook page. We do a lot of advertising on there. We're getting better and better. Let's see. Jesse Riggin, you're gonna have to put your camera on, young lady, if you want to hop up here. Okay.
Hey, can you guys hear me okay?
No.
Lance, mute your mic and let Jesse put hers on.
Oh, there we go. Can you guys hear me okay?
Yeah, yeah.
Okay, okay. I usually just talk vicariously through his mic, but you know I'm around this guy all day, so I get to, you know, be behind the scenes and privy and hear a lot of your stories, and just I just really loved hearing about you growing up. I mean, I hear you talk a lot, but I haven't gotten the chance to hear that story yet. But what I kind of wanted to hear tonight from you was kind of like a failure story and how you failed forward, because you know you've done some wonderful things in the industry, but I think most of us in this room have encountered it, so we're not of the mindset that it's just all sunshine and rainbows. But I love hearing people's stories over triumph. Is there something that you can look back at in your career where you're like, man, that was really painful and this is how I got through that?
Yeah, that's a great question. You know, I've I got laid off in the 08 meltdown. That was scary. I had just I had just bought my first own personal house. And you know, no money down. It was amazing. We were so happy. 3 months later, I was laid off, right? And you know, I think what I've always tried to do is take those in stride and turn those sort of things into triumphs rather than you know, failures. It's you know, you're only a failure if you don't keep trying and persevering, right? And so, you know, what I ended up doing was taking my time to remodel our brand new house and be able to springboard into the next phase and go out and try to find, you know, something that would work. And you know, I had to go out and use my skills in furniture building and carpentry and, you know, tile laying and just make ends meet so that we could pay for our house. And you know, those sort of situations are always scary, but it's really the fear of the unknown that we're scared about. It's not the actual outcome that comes from it. You know, in the multifamily world, we put bids on, I don't know, 10 to 15 properties before we ever, you know, landed our first deal. And so, you know, some may see that as a failure, but I see it as persistence, right? So it's only deemed a failure when you deem it a failure, is my opinion.
I love that so much. Sorry, I had to unmute real quick.
It's all
Thank you
good.
so much for sharing that. Yeah, that's just, and that's why you're winning, you know, because you just are constantly, you
Yeah,
know,
it's a
not
mindset.
letting that stop you.
Yep,
Absolutely.
it's a mindset thing, and you know, Lance preaches mindset. I'm big on mindset. You know, I work on you know, my spirit and my mindset all the time, you know, every day. And it's something that, you know, you end up learning how to take those hits and keep on walking or running instead of them letting them knock you down, right? Yeah. Christy, you want to come up on here?
Hello.
Hey there.
Hi. I just wanted to ask a couple questions that I've always been curious about. As far as the investors, when an investor gets in a deal with the multifamily, is there two separate types of investors where like someone comes in and there's the purchase of the property and then they want in and they want out? You know, maybe there's renovations, maybe there's not, but they want in and out just to kind of get the acquisition. Or are they investors that want to stay in it for years? And then if so, how do they get paid? Do they do shares? Do they do like a percentage of the, you know, I don't know how that works. I don't have a, I just want to understand how the
Yeah.
investors
No,
expect to get paid.
it's a great question. Generally, we're looking for passive investors that want to invest for 3 to 5 years into a deal. They're not looking for, they want the exposure to real estate, but they're not looking to be active in that real estate. They want the benefits of real estate, but without all the headaches of toilet trash and termites. And so it becomes an illiquid investment. It's some of our projects, what we do is plan on a refi after 1 to 3 years, and they might get their return of principal investment and then continue to be an equity partner. They're all equity partners in what we're doing, which means that they receive the equity upside and all the tax benefits to buying these large properties. And payments come in the form of dividends along the way, so a payout quarterly, and that usually looks like 6 to 8% on their money, and then they get the equity payout at the end, which if you amortize it across the hold period, usually is in the range of 16 to 22%, right? So it's the 8% plus the equity upside that they get at the end. That's how we come to 16 to 22% per year, right? Now, if someone wanted to get involved in multifamily and be more of a in and out type of person, where we all sort of came from is the Gator lending stuff, and that is something that you can do for multifamily. You can do EMD lending, right? And so an operator comes to you and says, I need $60,000 to secure this property. You negotiate the terms, and it's usually in the form of some sort of a return, whether it's a percentage or a chunk, as we see in Gator deals. And in those cases, you can even get some equity in the deals, right? So that's a more of a in and out type investment into a multifamily. I have seen a platform that has recently come about where it's sort of a trading post for syndication positions or shares in a syndication where it can become liquidated. So you would sell your shares of an asset to this company for, I don't know, 70 or 80 cents on the dollar of what it's worth at the time. But generally, it's an illiquid investment.
Okay. I was looking at a couple deals. I'm always looking at multifamily just to kind of see what the net operating income is at the end, because if you go on LoopNet, it kind of shows you everything, right?
Right.
If you're lucky. So today I saw one, for example, it was $8.5 million for the property. It had 60 units. The rental revenue was just under $1 million a year. And so the NOI was just over 400,000. So I'm thinking 400,000 is not a lot of money to have to try to give money back to a bunch of investors. But I don't know what that looks like. So, 400,000, if you saw that deal and if the revenue coming in is just under $1 million, but your NOI is just over 400,000, and you have to pay your investors, does that look like a good deal? I guess, what does a good deal look like?
Yeah, well, there's a lot of circumstances that go into a good deal, and it all comes down to the underwriting. You can use the 1% rule to identify whether it gets close to the 1% rule, and then you can do a deeper dive into that. An income of 100,000 with an NOI of 400,000 means that they have an expense ratio of 60%, which to me, that sort of tips me that they're probably mismanaging this property, and you could probably decrease expenses, because usually a expense ratio on multifamily comes out to around 50%, right? But it all depends on whether it's a value add and there's room to the upside, whether you can raise rents or remodel or decrease expenses to then increase your NOI. And so there's a lot to go into the identification of a good deal. But if something gets close to the 1% rule, then that really says to me, okay, look further. Now with LoopNet, I will say in the industry, it's seen as like the trash can of multifamily deals. You can find good deals on there from people maybe that don't know how to sell a property like that, but a lot of times they've gone through a broker and the broker hasn't been able to sell, and then they may list it onto LoopNet to try to sell it to someone that, who knows, maybe they don't know what they're doing, right? But not to say that you can't find deals on there. Again, I would say if you're interested in multifamily, I would put some time into learning the underwriting process. There's a great website called if you send me your contact info, I'll send you the website. It's I think it's Real CRE, where they have underwriting templates. And they're not that expensive. You can pay like $20 and get a great underwriting template. And then they have videos that walk you through the whole process. And I'm happy to spend some time with you to teach you a little bit about underwriting as well.
Yeah, I would like that because I have I know there's other people that probably have questions. I'll make this quick. I told Jesse about it kind of briefly, but I have 2 small little buildings I got in Milwaukee right next to each other. I close on the second one on the 23rd this month. And right now they're each just like, 1,500 square foot each. But 5 years ago, the previous seller had someone come through and take a look at the property. If they knock down those 2 buildings, what can we replace that with, right? So what they came back with was a 6-story unit. And it was zoned for, like work live kind of thing, which is really hot, especially in that area in Milwaukee. It's by the just where it's in Walker's Point. But anyway, Harbor View and all this stuff. So I have the drawings, the conceptual drawings, and it shows the 6 stories, and the bottom level will be the parking, etc. And so I am going to go forward with this, and I want to send what I have with pictures of like, because I want them like loft style, the concrete, wood, and brick kind of a thing. So I want to send pictures of inspiration plus these drawings that I got from the seller to a couple builders and start getting quotes. And I've already talked to my lender, to I have a credit union, so I've already talked to them to see if, do you guys even work with these kinds of deals? And he said, yeah, we do.
Yeah.
And it's a credit union, but anyway, so I guess what I don't know, what I need to learn, and what you are offering would probably help me understand is, would it even make sense to demolish these 2 buildings and then put in this 6-story? I think it came out to about 12 units at the price range that I could get, depending on the style. Just on the comps I've looked at, I should be able to get like 3,500 for each unit or more, especially if I do a fancier, which I would love to. So let's just call it 4,000 a month for each one, So I guess, because I don't know how much it's going to cost to build, and I don't understand the payment process to pay back the investors. I don't understand how all that works. So I don't know if it would be a good deal, or keep them, renovate them, and do the Airbnb, which from what I've learned, I would make like almost $200,000 a year on the 2 buildings being Airbnb.
Right.
So I don't know. So I need to figure that out before I go, before I make a decision. So that would be great if you would be willing to work with me on trying to understand that a little bit. Okay.
No problem. No
Thank
problem. I will say banks will not let you underwrite for Airbnb. You'll have to make the numbers work as a typical rental. And then Airbnb income is sort of above and beyond. It's just icing on the cake. But yeah, I'm happy to spend a little time with you and see if we can do a quick underwrite on it and see if it all makes sense. It will come down to the build cost and so on, but I can walk you through how, an investor might invest and how you would pay them back and so on.
Yeah, I would appreciate it. Thank you so much.
Of course.
Awesome. Thanks, Christy, so much. I have to just let you guys know about Christy. We helped her get some funding for some fix and flips that she's working on. This girl is a truck driver. She's in her truck right now. That's
I noticed
her cab
that, yeah.
back there, guys. How
Awesome.
cool is she? Christy, you're a rock star. Thank you so
Thank
much.
you. You guys are rock stars. Thank you for helping. I'm kicking ass out there, and thank you
Hell
for
yeah, you're
helping me do
welcome.
that.
Absolutely. Awesome. Okay. Let's see. Okay, well, we're at the end of the hour. Is there anything else? Okay, we'll get Pansy up here real quick. Justin, did you want to say something
No,
else
no,
real
go
quick?
ahead. Go ahead. Go ahead.
Okay. Pansy, come on up here.
Hi, yeah,
Um,
I just wanted to let you guys know that Mark and I have been doing underwriting video, Zooms for all different, from single family, multifamily, commercial type things. And we've been holding office hours throughout the day, so anybody who needs help, if they can't get a hold of Justin or somebody else, reach out to one of us and we're more than willing to help you out there.
Awesome. Yeah, that's fantastic.
Sweet. Thank you so
Thank you for
much.
offering that.
Yeah, go ahead.
Christy, I
Thank
think
you
you
so
had a
much.
question earlier when I was talking about a deal. You said how are investors paid back, principal and interest, or just interest or shares? Was that the question we were just talking about, or are you talking about that specific deal?
No, yeah, that was one of them, because that's just something I was curious about. Am I still unmuted, by the way? I don't
Yeah,
even
you're
know.
good. You're good.
Oh, okay. Yeah, so if they put their money into a deal, let's say we have 10 investors and they're each going to put in, let's just call it 100,000, make it easy. Are they going to leave that money in, like, first of all, is it amortized over 30 years, but then they want to get paid back in like 5, there's a balloon payment, but during those 5 years, do they keep their money, their principal in, and then they just take interest only payments and they're only paying taxes on the interest? Or is it, maybe they don't pay
Yeah,
taxes
well,
on it?
that's
you
more
know?
of a debt structure than it is in an equity structure. Right. So you're in a debt structure, you're promising that you'll pay back a specific return. In an equity structure, you're not promising anything, but you're projecting. And when we're doing our underwriting, we're trying to be very conservative and making sure that we're going to hit or exceed what our projections are. So it really just depends on how you want to structure it, whether you want to put a lien on the property and take out debt, or you want to have equity partners who are sort of along for the ride and trust your expertise and know that you're going to get the job done and participate in the upside, right? If you're talking about taking out private money, you're looking at a tip, maybe outside of our ecosystem in the sub 2 and some of the fire deals that Lance and Juan bring, you're looking at 12 to 13%, right? But that's all they're going to get. In the case of a equity investor, they participate in all of the upside. And so if the deal makes 30 to 50%, they are making 30 to 50% on their money, right? So it really depends on how you want to structure that.
So what you're saying, if they're doing equity, then that means, so obviously, like, rent is always what it is for the year, but then next year when the rent goes up, they're going to get more because the rent went up or whatever, right? So they're always going to have that ability as a shareholder. But are they just getting, they're just getting a dividend payment though, then, like, quarterly, right? Their money stays in the deal.
Yes.
They just get dividend payments.
Yes, correct. Yes.
Okay. All right.
Yeah.
I'm getting it.
Yeah.
All
Yeah.
right.
And the way we structure our projects is there's the stabilization period, right? Where the property might not cash flow. It could be 6 months to a year that we're saying, okay, well, it's usually 6 months. And so if our projected, or what we call preferred return, which is what we say they'll get paid quarterly, if we have a 6 months period, then that return on the first year is cut in half, but it might be caught up in subsequent years, if that makes sense.
Yeah, this is all making more sense. Like, I've wanted to understand these things and have someone to just ask these questions too, because it sounds like it could go both ways. And so
It could, yeah. And
Yeah.
you want to build in that padding, especially if you're building, you know, that you're either borrowing enough money to service the debt that you're taking on, both from the bank and from your investors, or you're saying to your investors, I'm not going to pay you anything for the first year because we're building, and as soon as this is cash flowing, and we have rents coming in, that's when we start paying you.
And they probably expect that because
Yes.
I mean, if they're a previous investor and
Yeah,
that,
correct.
yeah, that sounds cool.
It's all how you outline it too. Yeah.
Okay.
If you plan on raising money for that sort of thing, you need to make sure that if you're bringing on a couple of investors, you need to make sure that they're involved in the project in some way, and that they're not strictly passive, because then you get into SEC issues, right? If your anticipation that they're going to be completely passive, then you would want to consult with an SEC attorney to make sure that you're not violating any securities laws.
Well, I think, especially my first deal, it wouldn't make sense for me to do that. I'm going to need all the help I can get. So,
Yeah.
but yeah, I absolutely want to get into multifamily in building. I see lots like all over Milwaukee right now where they're like things are just coming so fast. I've been researching the area and I'm like, oh my God, I see this and I want that. I'm like, but wait, I don't know those kinds of people yet, you know?
Yeah.
And I feel like there's all these opportunities and I'm losing them, or somebody's losing them, and somebody needs to buy these properties. And so it's driving me crazy. I need to get educated on this so that I can jump on these opportunities and make some of us some money.
Yeah.
You know what I mean?
That's awesome. You know what a huge opportunity right now is too, is converting office buildings or old hotels into low income housing. That's a
Oh.
big thing right now.
Yeah.
It's growing and growing, and there's a huge need for housing. Milwaukee would probably be a great area for that. So you might want to keep an eye out for those types of deals. I know a few people who are working in that asset class, but
Yeah, there are people right now. You could buy. Milwaukee has some deals. I'm not, it's not something I want to, if I'm afraid to drive in a neighborhood, I don't want to do anything in that neighborhood. And
right.
that's just how I personally feel. But Milwaukee is giving away 5 houses for $25,000. If you find a house on their internet. I was looking all this stuff up just because I was researching stuff. But they're literally, if you find a house under 20,000 and you find 5 of them, they'll give them all to you for 25. And I'm like, what the hell? So if I ever build the balls to like go into those communities, I might look into what you're saying, but yeah, I'm not there yet. I kind of I want to stay where I feel safe, you know, and comfortable, and I want my carpenters and stuff to feel safe. So, but anyway, yeah, I definitely will look into all that stuff. I want to be able to help people. I'll get there. I will get there.
There you go.
Awesome.
Thanks.
Thank you so
Good luck.
much.
Yeah. Anybody else?
Damon, you want to hop up here? I saw Damon pop in.
Did he?
Yes. Where is he? There he is. He's got his Clark Kent look going on today.
Look who decided to show up.
Clark, you want to hop up here, man? Say something? I don't think he's listening. Anyways, man, that's a great show. Great
Yeah,
job, dude. Great job, bro.
Appreciate it. Thank you.
Tons of
Thank
information.
you.
Let's see. Justin, did you have any favorite books that you'd like to reference? Besides, you referenced the one. Is there any pivotal books that you read in your life that kind of give you a major mindset shift? Or anything you'd like to recommend?
Well, yeah, that book was that book I mentioned earlier was is a recent read. You know, how to win friends. What is it? How to win friends
And influence people.
Influence
Dale
people.
Carnegie, right? Carnegie.
Yeah, that's
Yeah.
a big one. You know,
Yeah.
it's a lot of anecdotal stuff, but
That's a good one.
you know, there's so much to learn and unpack there. Yeah, it's
right now.
What's that? Oh, hey Amber. We can't hear you.
Hi.
Yeah, how are you?
Oh. I'm driving, sorry.
No worries. How's it going?
Did she accidentally unmute? Amber's
to-
a
We need to connect
multifamily.
sometime, Amber.
No,
What's up?
I'm driving. I'm driving, so I don't know if my car's connecting or not.
Yeah, we can hear you.
I don't know. Oh, okay. Well, good job, Justin.
Thank you.
And
Thank you.
no, I was saying I'm reading that book now, How to Win
Oh.
Friends and Influence People. Good
There
book.
you go.
Oh,
Yeah.
cool. Yeah. I read that book 20 years ago for the first time, and I just listened to it again last year. It's a really good book.
I have a
Yeah.
a guy that I follow, not necessarily a mentor, but someone that I look up to in the multifamily space, and he says he reads that every year, and that he basically has it memorized at this point. But it's just such a good reminder of how to be influential in the space, right?
Yep, that's right. Well, it's all about, like you said, building relationships.
Yeah.
That book kind of teaches you how to do that, right?
Right.
Are we wrapping up? We just had another question pop
What's
up.
up, Damon? You want to come on here?
What's up, man?
How are you?
Thanks, Amber.
Sorry, my whole life broke loose today. Got darn water pipes bursting, and
Oh boy.
it's good times. I thought I made it through the ice apocalypse here in Houston without a scratch, and then all of a sudden today, somebody went to go turn on their washer, and all hell broke loose.
Mm.
What are you gonna do, man? It sounds like Justin was in here dropping knowledge bombs all over the place.
Yeah, he was.
Trying
Killed it.
to.
Oh wait, Trevor's got his hand up, man. Hey,
Killed.
We're in
All right.
here every week. I'll let Trevor go. What's
All
up,
right.
Trevor?
There you go.
Hey, what's going on, everybody? Just want to say thanks, Christy, for inviting me. And yeah, definitely a lot of gold nuggets and knowledge. I love the book suggestions. I'm also a commercial truck driver and investor. Still looking to pop my cherry on my first deal, but
Nice.
it's fun. The algorithm things. That is the one thing I haven't done yet that one of my other groups talks about, which is putting yourself out there on Facebook, Instagram, because people do deals with people they know, like, and trust. And one of the tips that I got just to put it out there for people was to have a whole book of stories about yourself. Like, what is your life story? What is your story now? Where you got to where you are? What stories can I tell people that help them understand who I am to build that rapport so that they know, like, and trust me? Because when you go to a dentist, you go to the dentist, the first time because you go back because you like them. Like, same thing when you buy a car from somebody or whatever. So I think that's a very powerful thing. And then like you guys said, when you're speaking to somebody, be thinking about what is their interests, what are their goals, what is their vision, what is their dream, how can I help them with what I'm investing in that dream, in that vision,
Totally.
to help them get to where they're going.
I love the
that's one of my favorite things.
I love the suggestion of a storybook for sure. That's great. I've actually been working on that lately. I took a public speaking class, and one of those things was, identify those stories that you can tell to compel people, right?
Mhm.
The idea was to make a fun evening out of it with some of your friends or your loved ones or whatever, and take a long roll of paper and a timeline, right? And mark off the years in however long, 10 years, or in year increments, and talk to people, your loved ones or your friends, about what they remember about you, and write those stories down so that you can use them in the future, and you can rehearse them, and you can polish them, and you can make them better, and you can distill them down into their essence so that you can tell them quickly, and you can get to the point, and you can really drive those stories to make any point you want, right? And relate to that person in that instance. So very cool.
Mind if I
That's a great
add to that, man? I mean, I'll put 2 cents in.
Yeah.
Me and Justin have been in rooms together, right? And I always find, and I don't know, right? I think it's like different things work for different people, but I find that just telling people who I am, right? I don't choose to tell a story. I just tell people who I am and
Yeah.
what I believe in, and right, like I I like to tell people that, you know, finding your true north and sticking with that, right? Like me and I think like me and Justin were just kind of in an ecom endeavor with this other partner that, you know, it didn't work out, right? But what was the thing that we kept preaching to her, because she kind of kept coming back and saying, well, it's not connecting, and we said, well, you got to resonate with your audience, right? You've got to be genuine, because when people are giving you their money, the one thing that they'll read through really fast is if you're trying to feed them a line, feed them a story, right? They really want to know who you are, that you're not going to, you know, run off and steal their money or commit crimes or you know, I think get things all fuddled, right? Like, so I like to say, you probably have a great story, man. You're a truck driver. You drive all over the country. I bet you have some great like stuff to talk about, man. Like all the stuff you've seen and done and people you've met and places you've gone, and people love that.
All the idiots out in the world.
Oh my God. Can you imagine? He's
The
definitely
terrible
seen more
drivers.
than his fair share. I'm
Yeah.
sure way more than most of us, right? Driving around the highways in America.
Yeah.
Like, yeah. So I don't know. I think for me, right, it's about being honest and being genuine and just being who you are, right? It goes a long way.
Yeah, 110%. I completely agree with that. So I'm totally on board with that. Totally all about telling stories. Just need to pull the trigger, right? Click the record button, throw some postings up there, tell people my story, what I'm looking to do.
Yeah.
Speaking on that, I actually one of my other Facebook groups I'm in is all about just like this, getting people together to help each other learn and grow in real estate. So third week next month, February 16th. It's a Friday. I'm hosting a meetup in Marietta, Georgia, to get other people together. To we all kind of use the same, you know, programs and schemes, and just get people, you know, face to face with each other instead of just on Zoom, like you guys talk about. To share their experiences and where they're at as a new investor, experienced investor, and just in getting them on the phone, you know, they get excited, right? About, oh, this is what I'm excited about, passionate about. Cool, let me jot that down. We can bring that up in the meeting. And so,
well, and I can assure you, man. If you're in Marietta, Georgia, you're in Georgia. I'm sure Atlanta is not that far. You're in a hub of some powerhouse investors, right? Like Abraham and Eddie Charger, and there's so many guys out there that are just doing deals. Like Big Boy from Outcast is out there. He's heavy into real estate. So I commend you on getting your meetup together. That's awesome. Make sure you get yourself, whatever you got to do to get yourself in rooms with those people. And don't just stand around, man. Like, yeah, I think people get nervous, right, when they're around people like that. You just go up and talk to them. I found like Abraham to be a really approachable guy. He's a super nice guy. He's a brown belt in jiu-jitsu. Man, we started talking about jiu-jitsu. We were on the bus. He was like, man, how long have you been doing jiu-jitsu? I've been doing jiu-jitsu since 1991, you know, like, and that was kind of just how the back and forth started. So I would tell you, man, look for those people in your area, because there are people doing a lot of deals out there in Georgia. That's a heavily sought after area.
Sure, cool beans.
Yeah, man. Get in those rooms and talk to people, man. You can do it.
Trevor, we look forward to having you back on sometime, man.
Yeah, absolutely. I appreciate it. Thank you so much.
Hey, thanks, buddy.
Christy, you got another one?
Got to be like Lance, man. Lance is reaching out to people. Lance is getting every single dollar, every penny out of his Zoom account for sure. Whatever he pays those guys, if it's $29.99,
That's right.
like, he is getting every dollar for sure.
You know it, bro. Go ahead,
Was
Christy.
Was Christy's hand up?
Christy, did you want to come up? Have one more question before we knock this thing out?
I guess
you're on mute,
Oh,
Christy.
here we go. I got it. I got
Oh,
it. Okay. I just wanted to say two quick things. One, to Damon, I just wanted to say, I still am a renter, and when COVID happened, everybody was buying toilet paper like crazy, right? So I got sick of it because, like, I get in the truck, everyone's closed. I get off of work, everyone's closed, and I could never find toilet paper. So I bought one of those bidet sprayers off of Amazon, right?
Yeah.
Well, like, it worked out great for like a year, and then, you know, finally you could start buying toilet paper again and everything. It was really cool. But through the first year of using that thing, the metal had bent. I woke up to go to work. I got out of my bed. My feet went splash. I'm on an upper unit. My entire apartment was flooded. It was raining in the apartment below me. I had to call my landlord. Thank God for insurance. I had to call my landlord. I'm like, oh my God, it's flooded in my apartment. And if it's flooded up here, it means it's flooded downstairs, and sure as shit. So they had to redo the entire apartment. But I was just gonna say, you started your conversation off about leaks.
No pun intended.
It was so, I could not believe it happened. But then also I wanted to tell on Trevor that he's a liar, because today he did his first deal. Today he did his first Gator deal for me. He paid the EMD for my second Trump Tower building that I got in Milwaukee. So today
Nice.
he wanted to get into Gator lending, and so we made it happen. So yeah. So you lied, Trevor. You did your first deal today.
Yeah, and certainly, like, when I'm talking, I don't want to take away from anyone, as if Trevor's not doing something that he's supposed to be doing. I think, like, I'm just throwing that out there, you know, as a gentle reminder. I mean, like, Lance reminds me, I remind Lance, right? Like, hey, you got to get out there and talk to people. You know, that is the way of it. And you got to push yourself out of your comfort zone to try to talk to new people and meet new people. And I believe that Trevor's probably already doing that, but, you know, hey, I'm throwing it out there, like, Trevor, get out there in those rooms, man. He's already doing deals. Yeah, this guy's going to be a rock star.
Talk to people at the truck stops.
There you go. And
It's
can you imagine
not
when she called her landlord, when she was like, somebody come help me. There's poo everywhere. And I'm like up to my knees in bidet water. Somebody come help me.
Dude.
And with that,
awesome. And yeah, so you guys, we appreciate y'all coming, and yeah, you know, let's wrap this up, guys. But
sorry I was running late, guys. My bad.
No, it's cool.
Anyway,
I know you're biz.
You know, we got her handled, bro. We take care of each other.
I mean,
man.
I don't doubt you guys.
Take care of each other.
I don't doubt you guys at all, man.
We do have to figure out the conundrum of the Aspire tour, though, if you're coming with our guests that week. But hey, guys, thanks everybody. We love you. We appreciate you. Go like and follow us on YouTube. The link is in the chat. We appreciate you. Tell your friends about us. Tell them how amazing Justin is, and yeah, and we continue to keep coming with value, you guys. We have some amazing guests coming up. So yeah, if you sign up too with if you register for the event, you'll get an email with the last week's recording, so you don't miss it, and then it'll give you an automatic reminder too.
Yeah,
so thanks.
Man. Go like that YouTube. Get us out there on YouTube. All right.
Thanks
guys.
everybody. Have a good night.
Everybody,
See you next
have a
week.
great night.